and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Mike Della Vedova, manager of the T. Rowe Price European High Yield Bond Fund. Hi, Mike.
Hi, Emma. How are you?
Good, thank you. I thought we'd start with oil prices. They're affecting everything and everyone at the moment, but in particular there are concerns about high yield because it makes up a large part of the sort of global high yield universe of energy bonds, don't they?
Yeah, exactly, especially in the US market. The US high yield market really was a key funding source for a lot of the newer US oil companies who were focused on fracking and horizontal drilling. And that was a real game changer that we saw in the market. And if you go back a couple of years, no one would have thought oil would have broken south of $30 a barrel, as it has done recently. And it really does change the profitability and the cash flow and the cost dynamics that a lot of those US high-yield issuers are now facing.
I suppose leading on to that, a lot of people are saying there are indicators in the high-yield markets which suggest that we're about to experience another global recession. What do you say to those scaremongers?
Yeah, look, I think there is a valid point there, but I think people have to be very careful on where they're looking and what parts of the market. The US corporate market has seen probably indications more of a profit-type recession as opposed to a general economic demise. A big part of that has been what people are looking for on the outlook, for example, of default rates. And a big portion of that are likely to come from some of the energy, some of the oil companies in the high-yield world in the US that issued bonds in the past 3 to 4 years. Expectations are default rates or forced exchange rates could run as high or higher than 50% of that segment of the market.
Of course, that is affecting the US, and this is a European fund. But I suppose the question is, do you have contagion risk in a market like this?
I think a lot of where the markets trade on contagion risk actually represents an opportunity. At the end of the day, I think something that gets lost in the mix, lost in the scaremongering and the negative headlines is high yield is fundamentally a credit market. And to the mid-long term, credit fundamentals will dominate. And so potentially, especially in European market, investors are concerned. There is a read across. A big part of that is just the flow of capital. You know, we're seeing the US market has seen our outflows all most of last year. And so people do get nervous. But if people then dig a bit deeper and think, what's really going to drive it? Why are these companies different? What are the key drivers of their P&L, their cash flow generation? In a number of chances, it's an opportunity. Things do stand out as mispriced, and it does represent a decent time for investors to take advantage of some of those opportunities.
Another thing that's going to affect the European high-yield market is the possibility that ECB will lower rates. We had Japan lowering rates into negative territory last week, which sort of opens the door for the ECB to do the same and more. How will that affect high-yield investors? I
actually think more than opens the door. I think
pushes them through.
Precisely. They're leaping through both feet potentially. We do expect in March there will be further support announced from the ECB. A big part of that is tied in with investor and consumer concern. A decent part of the growth, the relatively small growth that is being witnessed in Europe, is driven by the consumer and consumer confidence as opposed to industrial spend. I think once that starts to get rattled, once consumers start to keep a closer hold of their wallets and purses, then potentially it does put a lot of pressure on the ECB to act and to show even more support and more quantitative easing.
I suppose, bearing in mind everything we've just said, this plays into the hands of sort of active bond pickers. This is a time for you to sort of sort the wheat from the chaff and work out what's been negatively affected by contagion and what is actually junk's junk.
No, I completely agree. It really is. It's a time to really understand, appreciate, and be able to price the risks that you're willing to take for investors. Look, if you don't right now, you're actually doing them a big disservice. But there's also the other side of that coin, which means exactly that. If you're willing to do that, opportunities do stand out. And they can stand out for mid to long-term really good value and appreciation for investors right now.
Mike, thank you very much.
You're more than welcome.
This is Emma Wall from Morningstar. Thank you for watching.